What's up, you guys? Today, Tesla ended up closing down about 7.5%. I ended up closing up about $7,000, and we're gonna go over my loss on Tesla, which you guys are gonna see what I ended up taking. We're gonna go over why I've closed out the position and where I think Tesla's gonna be going within the next couple of days and within the next couple of weeks. I also want to share with you guys some unusual options activity that occurred today, specifically on Meta. I think that there's going to be a lot that I can teach you as far as why some unusual options activity is very important and why 90% of it is trash. And then the other thing that we're going to go through are some phantom prints that came in on the S&P 500. And if you guys want to go ahead and get the show notes, all you have to do is go to our website, which is thtcommunity.com. Just like Traders Helping Traders, community.com. And you guys can just go to the analysis and blog section and you guys can just check out the show notes. That's where you're going to see all of these screenshots. Also, follow me on X. All of our real-time updates are thrown out over there. Since doing this only once a day on YouTube, it's very hard to update in real time. So let's go through this. Tesla's down about 7% today. Now, I did not have a position open until right around the morning. We can actually go through and isolate and look at when I ended up taking my position. You can see I did end up closing it out for a $4,789 loss. And you can see that my first position was at $939 and my second position, my add-in, was at $1139. Both of these were very strategic. They didn't end up working out the way that I wanted them to, but not every trade is going to work out the way that you want it to. I see a lot of people who get upset at themselves for losing money. And at the end of the day, no matter how great of a strategy you have, even our strategies that are proven at 80% plus win rate, you're still going to lose money. And so you can't get mad at yourself or judge yourself as a trader by how much money you made that day or that week or even sometimes that month. Because in January, we had a really bad month. Instead, you have to actually weigh that out as to how well did you trade your strategy. Even if the strategy results in a loss, did you trade the strategy to perfection? Because if you did everything well, if you went through your standard operating procedure of trading, and if everything was met, all your criteria, but you just hit your stop loss, there's no reason to be upset about it. Now, in the instance of Tesla, for the past couple of weeks, you guys know that we've been watching this inverted head and shoulders. We're looking for a potential gap fill, which you can see we have this gap here from earnings. And we were watching for that gap fill back up to about 206, 207, 208. Now on Friday, I posted over on Twitter/X saying that I believe that gap fill had already happened and I wouldn't be trying to milk anything to the upside at this point. I think that, playing the upside to about 210 from where we were was not really worth it. And I see that a lot of people, have been talking about this potential rising wedge. And yeah, you're right. The fact that we did take out this level is very important. Now, in the morning and afternoon when I took this position initially, what I was looking for was a fair value gap fill back down here on the 15-minute. We're looking at a 1 hour, so it's going to look a little different. But we also had a bullish order block sitting down here. And so my thought process was, okay, there's a good chance that we could potentially see this retracement back down to 192.50, maybe even 190, and potentially bounce. What happened was, instead, we went right through that fair value gap, and we came down, tapped 190, and rejected. The only reason I closed this position is because it was not a relatively big position for me. It was a normal position size relative to the allocation capital that I have for my options trades, but I was already down 40-something%, and these expire on 3/22, and I was already pretty far out of the money. I just figured, listen, if Tesla holds tomorrow, whatever, I don't care. I don't care to make my money back on this trade, because the truth is, if 190 is broken fully, which I know we're under it now, but if we don't see a manipulation here and a bounce back up, if that's fully taken out, there's a pretty good chance we could see Tesla back down at 175, right? If not, maybe we do bounce here and we test this move back up. I would rather wait for confirmation. I talk a lot about Tesla here on this channel. One, mainly because a lot of you guys want me to. I am a long-term investor in Tesla, but I wouldn't be covering it every single day if I didn't have so many people asking me hey, could you cover Tesla? When we do our polls over on X, I always say, what do you want me to cover? We get a lot of Nvidia, we get a lot of other tickers, but Tesla's always number one. The truth is, I'm usually trying to only trade things that are in an uptrend and that overall are in an uptrend. It's just easier to trade that way. Like, we can short the market, we can go against the trend, but in most cases, trading with the trend is ultimately going to be easier, and that's what all of my trading scripts are based around. With that being said, though, Tesla is pretty oversold in the short term. If we take a Fibonacci retracement from highs here of about 265 down to this banked low, you're going to see that we're trading way below equilibrium, but that there's definitely a good chance that we could see this potential move back up to at least 220, 230, 240, but we need some confirmation first, right? The fact that we rejected off of 200 was not a good move. Now we have to see, are we going to start taking out these lows? And if we do, specifically 180, because of how thin the volume is here, we would definitely see that drop very quickly back down to the 150s, which would be like about a 15% drop back down, which is very, very aggressive. So at this point, I'm holding my shares long term. That's whatever. That I don't care what happens day to day with that. From a trading perspective, I close out my long, and we'll just see what ends up happening for the rest of the week. Now, if we go and take a look at the flow that we were talking about, you guys are going to see here that we have confirmed bullish and confirmed bearish flow that we post every single day over on X. And I post all of my handpicked flow over in our Discord community, which you guys can join with the link in the description. As well, you'll also get access to our trading bots, some of my trades, and a lot of other awesome perks. Now, confirmed bullish and confirmed bearish flow. I post these a lot, and a lot of people, I feel, have this missing link when it comes to what's the difference between confirmed versus unconfirmed, because the truth is that 90% of flow is trash, because in most cases you don't know if somebody's hedging a position with that. You don't know if they're on the buy side or the sell side. If you see $500 million worth of calls come through on Tesla and you don't know if that's coming in on the bid or the ask, you don't know if that person's selling cash secured puts at 500 million or if they're buying $500 million worth of calls or something like that. So the only flow that we care about is the flow that we can confirm, because as a trader, as a data analyst, that's what we're doing. We're just analyzing data here. We want to know the confirmed numbers. Anything that's not confirmed doesn't matter. If you guys want to get the full breakdown on how to read confirmed flow, once you're in the show notes, you can just click here and it'll bring you to a thread and a Notion document teaching you guys how to do that in further detail. But the main thing that we're looking here is that all of the options that come through here have to be one of two things. One, above the ask, or two, at the ask. In any transaction, whether it's stocks, whether it's options, you're going to have a buyer and a seller. And so the person who is selling those options is considered the person who is at the ask. So the ask is what the seller wants for it. The buyer is going to be the bid, and that's what they're willing to pay. So if you have a contract that you, the seller, your asking price is $1, if they're coming in at 95 cents, well, now we have a 5-cent spread between the ask and the bid. Okay. So obviously in this negotiation, the buyer doesn't want it bad enough to actually take it from the seller's hands and pay what the seller wants. If they did, that's very important. And when we go into explaining urgency here in a moment, you're going to understand this, because it's all going to come from a psychological level, okay? If you see somebody who says, okay, you, the seller, is asking $1 for these contracts, I don't give a fuck. I will buy all the contracts from you for $1.05. I will actually come in above your ask. What does that mean as the buyer? Urgency. They want it. They don't care. They will pay whatever they want for it, right? If there's a big Amazon warehouse that's going to move into your neighborhood, they will pay whatever they have to pay to acquire the land because they need it. They will pay above asking price. And psychologically, it means that that is very valuable, and there's always a reason that they're doing that. The whole point of this is that when we're looking at confirmed flow, it is only the flow that is coming in at the ask, so exactly what the seller's willing to pay, or even above it, which is even better, because it means that they are cool with even losing money in the short term, overpaying for this, because they want to get in so badly. Now today, Number one confirmed flow, which none of these confirmed flows for me is a buy indication. We'll talk about what that would actually be in a moment. But confirmed flow is Apple today with 17 million, which Apple had an absolute abysmal day, down about 3%. We are pulling back into my buy zone here. I'm already in positions on this, not really doing too well. MSTR, Google, FSLR. Now, I want to go through and show you guys what constitutes an actual unusual options activity, because a lot of people have a really weird questions about this, because they'll be like, hold on, how is this unusual yet Meta has a ton of bearish flow, okay? This is very important. The main criteria that we're looking for when it comes to an unusual options activity or an unusual sweep is one of three things. Number one is going to be size, okay? Because this is just one contract, and that's what we're trying to do. We're trying to find these unusual buying patterns that are occurring so that we can get an understanding of what insiders are doing and what hedge funds are doing, because they're trying to hide their orders at all times. So we need to see size. It can't be a small amount of money. In this instance, you can see this all happened within 1 minute from 10:03 to 10:04, and every one of these orders was no smaller than $600,000-$700,000. Average was about $1 million per hit. So we see all of these orders coming through, pop, very quickly within 2 minutes, each one of them $1 million, and you can see the details, AA, okay? Above the ask, above the ask, above the ask, above the ask. This is showing urgency, okay? The presence of AA and sweeps, which sweeps just means it came in on one exchange. We'll talk about that in a different video. But basically, it's showing that they don't care what the price is. They just want to get into this, okay? And then the third thing is time. These contracts, these expire on May 17th, 2024. So we have some time on these, okay? Meta here, yes, $32 million, but these could be mostly contracts that expire this Friday. So what makes this so significant here, and it's not a reason for me to go buying, we're going to actually look at the chart, but in this instance, this is something that's considered unusual. And so I wanted to use this as something that we could potentially use as, you know, a learning material and something that we could cover. So I'm not going to take a trade on this at this point. It looks like it's probably just going to be a continuation run, but I'm not going to be going long here. I don't think the RVR is worth it, but this is something that we should be looking at. Now let's go into the last thing that I want to talk about so far in this video, and that's going to be SMCI. So I took a position today on SMCI. We ended up shorting it a couple of weeks ago, made about $18,000. And I had very strict requirements in order to enter SMCI short. And I want this to be known, not because I care about how people think about me as a trader. Like, I'm doing this for 9 years, I don't care. But I want you to understand from a psychological level that we're not just trying to find a top, okay? There is a major difference between, from a price action standpoint, from what's happening on SMCI versus what happened with NVIDIA versus what's happening with AMD and even Intel at this point. And of course, fundamentally, there's different things. Like SMCI was S&P 500 inclusion. It's what we saw today. But I want to go over why this is so important. I post the quicker trade updates every once in a while when I'm covering like one ticker extensively. I will post a lot, so about Tesla or SMCI, whichever it is. But I'm always giving very clear rules. And if those rules are met, then we end up taking the trade. If the rules aren't met, then we don't take the trade. The rules in this instance were very important, and I'm trying to find the actual post, but whatever, I don't think I'm going to be able to find it. The rules were very simple, though. Price today, after we got that big push on Friday, had to open below $1,100, which we did, but not open any lower than $1,000. This is very important. The reason for this, if we had opened all the way up here at a higher high at $1,100, that means that there's enough strength, enough buying, and the only people who can move the market really that heavily is going to be if big money steps in again. So if another wave of big money steps in again, and it's not just retail continuing to load in, and while big money's getting out, if they're actually stepping in, they're going to take that high out instantly on Monday. It didn't happen initially. We saw this open here at 10:39. Yes, we took it out, and I was talking with my Discord team at like 12:30, and I was saying, hey, look, it looks like we're going to end up getting stuck out of this position and getting stopped out. But I said, if we close under 1100, I'm going to hold my position. And we did close under 1100. So the fact that this got taken out, maybe tomorrow we'll see the push up and I'll close and we'll end up losing. But at this point, the fact that we did not take that high out shows that there is some weakness, and I do think there's a chance that we could reject here. My downside targets are about $850 and about $750. My max loss is going to be up around 1100 to 1150, which means I'll probably lose about 10 grand max, but I already made 18 prior. So net, I'm still up, which is why I'm being a little bit more risky here, because the downside profit would be awesome. So I hope this helps, guys. Let me know what you think. Go check out our Discord community. Go and check out all of our awesome resources on our website, thtcommunity.com. And I'll see you guys next time. Peace.